Yo, yo, yo. What's good, guys? Trying to get oh, we're getting a drop in Bitcoin already. We're getting a drop. Coming below the VWAP.
Yo, yo, yo.
We're
good,
7 minutes before the FOMC meeting.
We're getting a drop in Bitcoin already. We're getting a drop.
Now, I'm going to do my best to try and bring. Okay, I got sound off there. Turn this off. Let's see. I'm gonna go to YouTube's. Want to go to a live stream of the presser when it comes to time. All right, guys. So what we're looking at, we see Bitcoin. It's currently dropping. I need to share this in my Discord. Hold on one sec. Copy. Currently dropping. So right now I would be thinking about possibly longing here, but let's wait and see what happens. I kind of want to see what happens right at the one. Oh, I just noticed. Okay, yeah. Hey guys. Welcome to the channel. This is David. Welcome to Lunar Beaches Crypto. Yeah, so we're going to do the FOMC today, guys. We're going to do it together. We're going to do it live. Let me try and get all my socials done, get this shared. If you're here in the chat, say what's up. Looks like Bitcoin's come back down into balance. We are below the VWAP. So I would be looking for longs right now as it's dipping. Now, this is what I'm going to expect. I'm going to expect a dip like this, and then maybe we long, and then maybe it comes up, maybe even takes out that high, gets you in the mindset that we are going long, and then they rip price back down to the downside. So just keep that in mind. That's one option. We could come back up, come back down, and then just keep on going. So it's going to be very volatile. It's going to be crazy for like the first, let's say, for like the next hour, for like between 1 and 2 p.m. Central Standard Time. It is going to be very volatile. I do not recommend anybody, not financial advice, but I do not recommend anybody trading if you're a noob within like the first 15 to 30 minutes, maybe even an hour. Let things kind of settle down, let the volatility settle down, and wait until there is a clear direction of the price action. So let's see. Right now, it's moving down hard. Okay, so we must have got some pre-numbers out. Discord is being slow as usual. I might just have to close it because Discord tends to mess up my streams too. So I'm just going to quit Discord and I'm going to share it through my phone. All right, 3 minutes, guys. 3 minutes. Let's go. 2.5 minutes. All right, let's go. All right, here we go. Let's do this. Share. Copy. Here we go. At everyone. Live. Let's go. Let's go. All right. I got it sent out. Now look. They're already shooting price up. They want to get people to go long here, I think. All right, are we going to do this today? I guess we're going to do this today. How do I refresh? How do I refresh? Wow. This has been a wonderful day. By the way, guys, before I even came on screen here, I got off work early today so that I could come and do this. And on my way home, I ended up having a flat. And then I put on my spare tire, and my spare tire, as soon as I lowered the car, as soon as I lowered it, my spare started going flat. So I was just sitting there trying to think of what to do, and this old man pulls up and gets out of his truck. He's like, "Hey, you want to throw that back in my truck, and we can go down to my house and air it up?" And me being as desperate as I was, and being what would I call it? Being the vibe detector that I am, the really good vibe detector that I am, I picked up a good vibe on this guy, so I was like, okay, yeah, let's go. And my wife was like, "Well, you hopped in a car with a stranger?" I said, "Yeah, I kind of had to. Plus, I had a knife in my pocket in case anything happened, so it is what it is." But all right, it's 1:00. All right. Oh man, I'm already missing it. Let's go. What's going on? What's going on? What's it doing? What's it doing? Oh, it's dropping hard like a rock. Oh, come on, load. This has just been an absolute S-word show today for me. Dropping hard like a rock. Oh, whoa, look at that. Massive shoot up. Whoa. That is insane. See, this is why you don't trade this. This is why you don't trade this. Look at this. This is a 1 minute candle, guys. 1 minute candle. Look how crazy it's going right now. Look how crazy it's going right now. All right. Let's go see what the what did we come out to? Let's go to Forex Factory. So in 30 minutes we will have the FOMC presser. So what are they going to try to do here, guys? What are they going to try to do here? I don't need this. I don't need this. I need... Oh my god, everything's moving so slow. Oh, it's pumping. That makes me... Oh man. I think I might have to go short here. Not financial advice. I need this on here, and I need my TPO on here. Let's go, let's go, let's go. Let's see what we're dealing with here. To get you in the idea of going long, really makes me want to go short. We're pumping. Oh, single print. Where's my TPO? There it is. Oh wow, this has just been going on all day. Just a lot of orders being built. Let's see here. Okay, we got that. Is it gonna come down? What's it gonna do? Shift down, shift up, shift back down. Now, typically, if they shift down initially, then that's going to be the direction that they are going to end up going in. So even though they go up afterwards, they're likely to shift the price back down. Now, they could just do it temporarily. They could just shift price down, shift price up, shift price back down, and then keep going to the upside. But we'll just have to wait and see. So, yeah, price action is going absolutely ham right now. Litecoin blasting off. It's at 11% on the day. What's it looking like? So that was just that was just going into the day. Let's go back to Bitcoin. Or let's check out Ethereum. Ethereum, we're above the VWAP. So how I would want to be trading this, guys, is we get above the VWAP, right? Which is this orange line here. We get above this VWAP. And then once we start to see some price consolidation where, you know, it's just kind of trading sideways and the VWAP's maybe staying a little flat, what I would want to do is I want to exploit that and I want to go short because price tends to come back to the VWAP and then you exit your trade. So same goes for down below the VWAP, VWAP down below, you go long, you go long up to the VWAP and then you can exit. If you're feeling ballsy, you wait until it goes all the way up. Now, as we can see, man, I hate this drawing tool so much. Like, I don't know why it gets stuck like that. It is so annoying. All right, while that loads up, I need to go to Forex Factory. Let's go ahead and pull this up. Let's see what the numbers were. I don't even have my chat up. Is anybody in here chatting? Yo, what's up, Micah? Let's go, let's go, let's go. All right, so what do we have? The federal funds rate went up 75 basis points, just as everybody expected. Okay, and now we've got to wait for the presser, which is in 25 minutes, which will give us a better understanding of what the Fed is thinking for the rest of the year, which is we just have one more FOMC, which is in December. So that's what I would be looking out for. Now we do have this initial balance box here, and we have traded outside. Man, this thing is being so glitchy. It's almost like there's a ton of people trading on TradingView right now. Trying to figure out where we're going here. We were getting some consolidation up here. Let's zoom out a little bit. Where's my TPO? Took it off. What? Come on. All right, we're at a high over here, so we're at a high over here. Man, how high is it going to go? Is it going to go to 21? I need my TPO. TPO. And I need my squeeze momentum. And I need my RS. Well, let's see. What's the VRVP? No, let's get rid of that. All right. So where do we have orders? Let's just zoom out so we can read this a little better. We're looking at that. Let's go to the hourly. Take a look. How's everything looking and sounding, guys? Let me know. I'm hoping I don't get like an echo when I do the presser. If I do, let me know. I'm pretty sure I know how I can fix it, but all right, so we've come up here. All right. Wow, that's really going. All right, let's see. All right, let's get rid of this. Let's go to, let's put on our Trader's Reality, see what we're looking like there. It's good. Your voice was cutting in and out, but no echo yet. Yeah, it's probably cutting in and out because I had because I stupidly opened. Oh, I need to close this. Quit anyway. Yep. Because I opened Discord, and Discord always messes up my streams. So that's cool. All right, so we've recovered this red vector candle here. Could come up, recover this red vector candle here. Could recover this red vector candle here. I would expect, so we did come up, we hit the psychological low. We might come up and hit the psychological high, and we might come up and hit the last week's high. This is a nice giant green candle, so I will be personally looking for a short. That's what I'm looking for here. I'm looking for shorts. Since we are moving up, I'll be looking for shorts for sure. We could be topping out already on the squeeze momentum indicator. Well, let's go ahead and throw an RSI on here, relative strength index, and let's see what we're looking like there. Already curving down. We've already got a bearish divergence. I'm going to go ahead and enter a small short position. Excuse me while I do that. I should have done that much sooner, but you know, it's been a chaotic day, but that's fine. Let's see. Where's my liquidation? 21.5, so I'm good on that. If in case it goes higher, I will just ladder into more shorts. Right now, shorts will probably work out. Let's at least short it down to the VWAP, which from that price to here is almost 1%. So 20x leverage would get you 20%. We do have some buys coming in here, but these green candles can and probably will be taken. So anybody new to the Traders Reality hybrid system, basically the green candles and all the colored candles show when there's a market maker presence. The green candles imply that market makers are setting up shorts on the way up, and the red candles imply that the market makers are setting up longs, and then your blue candles are basically positive green candles that had a ton of volume in them, and same goes for the purple candles. They're red candles that had a ton of volume in them. As you can see, it's starting to move up a little bit maybe. We are on the 1 minute chart. Now we do have, this is 1 minute, so take this with a grain of salt, but we did already have a bearish divergence on here that's sending the price down. Now, let's see, what do we got? Let's go, Sergio, what's up? Let's see here. We got 3 viewers in the chat. What's up? If you could, please hit that like and subscribe if you're new to the channel. All right, so we're coming up. Let me see. We're way above our initial balance and above the VWAP. So if we go any higher, I will continue adding to my short position, but only at these levels. Your psychological high at 20,900. And then your last week high at $21,094. This is per the KuCoin chart, and this is not financial advice. Please do not buy or sell anything, because of anything that you're watching on my stream, do it at your own will. Everything that you do will be done at your own will. I am not telling you to do anything. I am just telling you what I am doing. So right now we have price pushing up. Let's go over to ETH. Let's see what ETH's looking like. ETH, that's kind of bullish. It's kind of bullish. It did come up to the psychological low and did reject, and now it's trying to come back up. Maybe pop up into this psychological range between the 1600 and the 1630 range. Yep. No bearish divergence there on the 1 minute chart. but it is there on the Bitcoin chart. So, but it is, again, just 1 minute. So take that with a grain of salt. Let's go to the grain of salt. Yeah. Go up to the 3 minute. So we had some blue vector candles in here. So that showed that there was an increase in volume. Market makers were not ready to send the price up too high just yet, at least, or they were trapping traders up here. So trapping people to go long, only to rip it down to go short. Now, they haven't really ripped it down. They just did this little dip right here, but they haven't really ripped it down to get people to get out of their longs, possibly. Because I mean, if we take a look, if people bought up here and all the way down here, I mean, you came down less than 1%, right? So people probably aren't leaving their longs just yet. LTC actually dropped. It was at 11. All right. Bitcoin is still just kind of hanging out. So we might hang out in this region. When should we enter? I will not tell you when or when not to enter. I'm sorry. That is on your own free will. I can't do that, man. I can't tell you when to enter. But I will say that I would wait, probably 15 minutes, maybe even until after the FOMC press conference to enter a trade, just to be safe. Wait for the dust to settle. Wait for all this crazy volatility to stop. I entered a short simply because of this right here. And where's my tools? Yeah, simply because we went down first. So what the market makers like to do is they like to shoot you down, they like to bring it back up, and then they like to shoot you further down. So that is to, one, see all this trading range in here, this trading volume up in here. It's been kind of sideways today. This initial move down here was to, one, hit long stop losses, so to take out those longs, and then the shift up is to do the exact opposite, to take out any short stop losses. And now people are they're trying to get people in the idea that they're going to keep pushing price up, and the more that they do that, push price up, I will probably be adding to my shorts. That's just me. It's not financial advice. Let's see. Let's go to the 1 minute again. Let's see what it's shaping up like. So momentum is coming down a little bit, but it is kind of stalling off a little bit. We do have, if we start from here to here, slight bullish divergence. But again, it is the 1 minute chart, so take it with a grain of salt. But it does look like that we're hitting kind of a wall here, unless it just breaks through right here. Let's see what happens. Is it going to break through? I don't know. Let's see if it breaks through. My live stream looks like it's way behind. That's just because okay, never mind. All right, let's see if I can find FOMC meeting live. Now I'm going to, if you're in what you call it, if you're in the chat, please let me know if this is
with more and more difficulty, frankly, if essentials
echoing.
continue to rise in price.
And just real quick, I guess just your reaction to the market's reaction to this. And I know you're more of an economy guy, not so much an equity person, but when you take a look at the euphoria that we continue to see in the markets when the Fed is still saying that they're going to raise rates, it just might not be as aggressive. Do you think a move like this is justified?
Now, we'll see if it
Sounds like it's
holds
good
for
on
the
my
next,
end. What about
couple
you
of
guys?
market sessions. But I think what you're seeing right now, and the Dow is up, 202 points, is sort of a sigh of relief mini rally after a lot of suspense building up, or not so much suspense, but let's say just building up to the decision and the announcement by the Fed. And I think what the Fed has done today, as well as has said, sort of confirms the expectations that were already priced into the market, and the market is responding positively to having their expectations affirmed.
The markets are walking through a desert searching for any hope that there might be water on the horizon, aren't they? Dennis Lockhart, great to have you here, sir. Appreciate that.
Thank you.
All right, joining us now.
Cannot believe how slow everything is
reaction,
acting
Jay
right
Powell,
now.
Federal
Oh my
Reserve
God.
Senior Portfolio Manager. Good to see you, sir. Let's first get your reaction. We knew the 75 was coming. Anything inside the language surprise you, in particular the mention of the lags with which monetary policy affects economic activity and inflation?
I don't.
Well, I think you and all the prior guests who just spoke before me are focusing on the right things. That the addition of that language elevated
I want to
the importance
see.
of the idea that when you
All right,
get
let's
closer
take a
and
look
closer to
over
a
at the
destination,
Dixie,
you
guys. Let's see
slow
what the
down,
Dixie is
just
doing.
like when you're driving a car, and that's what they're telling us.
Keep an eye on
the
Bitcoin
acknowledgement of the
down
lags,
here.
the cumulative tightening that's in the pipeline. The signal is clear.
All right, so
they're getting closer
yeah,
to
this.
their pause. It'll probably be early to mid 2023.
What
Call
is
it
it? 1 minute.
475 or 5.
Yeah, they had a major
and then
drop.
They have to stop and wait.
All right, I'm gonna.
cumulative.
All right, be quiet. Yeah, so we had a major drop on the Dixie. This concerns me as far as price action for Bitcoin, because with this drop like this, I do expect them to recover that, and once that gets recovered, that means Bitcoin will come down and assets across the board will start to come down. That's how I look at that. And they're still stalling out up here. They want to get people into the idea that it's going to go long, and that way they can trap traders up here and then shoot the price down lower. Take that liquidity. Take that liquidity. All right, so we've got FOMC in 10 minutes, the meeting itself. Let's see here. Not trying to get any copyright strikes. All right, let's see. Got a lot going on here. Let's see. So that's the US dollar on the 1 minute. Let's zoom out so we can see exactly what's going on. Let me get rid of this box here because it's annoying. Come on. All right. And let's close that. Also, guys, yeah, and look at this momentum. It is just, it's swinging right back the other way. This is about to come up. Bitcoin might be about to come down. Yeah, we shall see. I wish everything wasn't so erratic today with my flat tires that I had, but yeah, falling like a rock at the moment, but it fell like a rock, and then it's been consolidating, and then you got your VWAP up here. And if you look throughout history, anytime you come down from the VWAP, you consolidate, you come back up to the VWAP. You leave the VWAP, you come up, you consolidate, and then you come back down to the VWAP. The VWAP is the volume weighted average price. So it's whatever the price is weighted by the amount of volume at any particular price. So at a particular price. So let's see here. Let's get rid of, I want to get rid of that box there so we can see. All right, let's put this on the 1 minute and try to track it alongside the, do I not have my indicators? There we go. Try to track it alongside the Dixie. Now, I would actually prefer to have the Dixie down here and have this Bitcoin up here. All right, let's see. Let's see. Let's zoom in on the Dixie. This looks like it's flat, but it's coming up. See how momentum is coming down on Bitcoin, but price is coming up? That is a divergence. That is showing that buyers are stepping in, but price really isn't moving, right? Price really isn't moving up the way you would like to see it. So that tells me that the movement to the upside is stalling out. And that makes me want to go short. As a matter of fact, I am going to add to my short position just like that. 20,633 was my initial entry. 20,640. All right. Leave enough dry powder on the side just in case it comes up. But we're definitely seeing a stall here. So this is a consolidation point. I will be looking to short wherever we go, to short back down to the VWAP, which right now would be a 1% move to the VWAP from current price. Let's see. What do we got going on? We got 5 minutes left, guys. 5 minutes until Jerome Powell speaks. And yeah. So this is what happens. They always do stop hunt low, stop hunt rise, but they didn't. They didn't bring it back down. So that is interesting to me. We're going higher. They've got to get more people into the idea that we're going long. And maybe we are going long. But 15-minute, close to topping out on the 1 hour. Let's go to, or on the 15-minute, let's go to the 1 hour. Sorry for that. I was thinking 1 hour, but I needed to go to the 1 hour. Yeah, we're coming up. I mean, we're at a good spot on the RSI. We're coming up more. It's starting to move more. Man, this just reeks of I'm going to absolutely destroy you. You know, the market makers, that's how they would sound. I'm going to destroy you. Let's turn on EMA, see what we're looking like there. Pull this back. So we are above the 50 EMA. So that makes me think that they want people to go long here. We're above the 50, we're above the 200, we're above the 800 EMA on the 1 hour. So that's actually kind of strong for my longs. So let's see. So if it goes higher, you just add to your short position, but is there any penalties for it going higher? So I will increase my short position as it goes higher while lowering my leverage as it goes higher, simply because I want to make sure my liquidation price, I might stay at my same leverage, but I want to make sure my liquidation price gets higher and higher. You know, I don't want it to get closer to my entry. I want it to get away from my entry. So, but is there any penalties for it going higher? Yeah, so if it keeps going higher, then I mean eventually I'll just have to exit the trade and take a loss. But I'm not quite sure where I would exit. It's gonna be more of a what do you call it? It's gonna be more of a percentage deal. Like how much of my trade am I willing to cut loose in the instance of a loss? All right, it's really moving now. Really moving. Really moving. But there's just like there's no volume here. This is just market makers, guys. This is just market makers pricing. What do you call it? Bidding the price higher. They're just bidding the price higher to get you to go long. That's what they're doing. They're just bidding the price higher to get you to go long. That's what I think. But we'll see. We'll see what the Dixie does here. It's starting to pick up some momentum in here. So we'll see what it does. I want to get rid of the RSI on this one. I just want to see momentum and price action. That's all I want to see on this. So if that Dixie starts to shoot up, going short was a great idea. All right. 1 minute till Powell speaks. All right. Let's see if there's another. I don't want to watch someone else watching him. Fed expected to raise rates. Live Bloomberg. Let's see. Let's go to Bloomberg. What are we looking like here? What we looking like here?
To be the Fed's primary concern. How much was that additional comment thrown in there? Basically a nod to the moment of politics that we're in. How much are they basically saying, look, they're taking
Can
this
you guys
into
hear that?
effect. We understand your point. We got it. We're doing our best. Got to get inflation under control. Thanks.
It's not the first time that the Fed chair's talked about any of these issues. I just don't think any of this is really that new at all.
Do you think this is a snoozer?
I think Neil Dutter of Renaissance Macro nailed it a week or so ago when he said all of this is implied in the dots. What happens in the next hour is one thing. What happens on November 10th? Completely another. That's going to set the stage for what 23 and the trajectory and the glide path into 2023 is going to look like.
We don't have time to banter, John. I'll be very quick here.
We've always got time for banter.
No, Mr. Dutter right now saying on the statement today, quote, Brainerd's thumbprints. That's what Neil Dutter wrote.
I agree with you, and most people do.
You know,
it's an echo of the speech.
John Williams maybe weighed in here, other monetary heavyweights. Loretta Mester of Cleveland may have weighed in on that. But I'm sorry, I was really taken by the force of this phrase, cumulative tightening.
They've done a lot of work, Tom, in a short amount of time. And they've done way, way more than most people thought they would do even 9 months ago. If you think about where they were 12 months ago, Tom, they still hadn't dropped transitory. They were still talking about transitory, and we were still waiting to see if this Fed chair got a second term. It was only in December they were forecasting 90 basis points of hikes in 2022, and we've just had a fourth consecutive 75 basis point hike. Then we get wrapped up in this and forget sometimes just how much expectations have shifted around this Federal Reserve in a really small amount of time.
Market makers made his presence.
There have only
red vector
been
candle.
5 75 basis
This could
point
turn
rate
into a
hikes
green vector, so
in the past
don't
30
get it
years.
twisted.
The Federal Reserve chair walking into the room. Let's get over
All
to
right,
the Fed
here
chair
we go.
right now.
All right, comes Powell. Let's see price action already coming down.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve.
He doesn't seem
as the
to
bedrock of our economy.
Down.
Without price
unlike the
stability,
last
the
president.
economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Bearish divergence.
In addition, we're continuing the process of significantly reducing the size of our balance sheet.
Significant.
Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace.
Slowed.
Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers.
What is this blue line?
The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services.
Dixie falling.
Russia's war against Ukraine has boosted prices for energy and food.
This could be a
and
fake,
has created
fake
additional upward pressure on inflation.
Head fake.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points.
On the 5
and we are
minute.
continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain
ongoing
a
increases.
There
it is.
That is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand.
We're starting to see the drop now because he said ongoing increases. Here we go.
It will take time, however, for the full effects of monetary restraint to be
Here we
realized.
go. It's dropping. It's dropping.
Inflation. That's why we say in our statement that in determining the pace of future increases in the target range,
which way we
we
going?
will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal.
Dixie's starting to come up.
There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go. And incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
Ultimate level
Our
will be.
decisions will depend on the totality of incoming data and their implications.
Ultimate
for
level
the
of interest rates will be higher than previously
We
expected.
will continue to make our decisions meeting by meeting and communicate
Ultimate
our thinking as
level.
clearly as
So
possible.
I think their initial goal was
steps
4%.
to moderate demand so that it comes into better alignment with supply.
Goldman
Our
Sachs has been saying
overarching focus is
5%
using our
by
tools to bring
March.
inflation back down to our 2% goal.
Look,
and to
oh,
keep
Dixie,
longer-term inflation
shot up.
expectations well
Dixie,
anchored.
shooting up.
Reducing inflation is likely to require a sustained period of below-trend growth and some
Dixie
softening
just
of
shot
labor
up
market
like crazy.
conditions.
And
Restoring price
Bitcoin's
stability is
falling
essential to set
past the
stage for
VWAP,
achieving maximum employment and
back
stable
into
prices
balance.
in the longer run. The
Is it going to
historical
stop
record
at balance, or is it
cautions
going to keep
strongly
going?
against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Dixie's still going.
We at the Fed will do everything we can to
Market
achieve
makers
our
showing
maximum
up. They really
employment
want to
and price
push this.
stability goals.
Which way?
Thank you,
Which
and I
way?
look forward to your questions.
Which way?
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting?
Dixie, what are you going to
Or is
do,
that something that the
Dixie?
Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that.
Beep, boop.
We do need to see
on,
inflation
come
coming
on.
down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for
He
slowing
sounds
the
kind
pace
of hawkish.
increases or for identifying the appropriately restrictive level that we're aiming for.
Saying it.
We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective
Sufficient.
over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all
We're
other
at the
financial
VWAP.
conditions, and as we make that assessment.
I'm going to go ahead and close my short.
Hi, Howard
Nice
Schneider with,
15%.
with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is
Got a little
not
15%er
for
there.
another 75 basis point increase?
So, what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was and has been how fast to go. The second is
right,
how high to
going to
raise our
5 minute
policy
now.
rate.
Let's
And
see
the
what we're
third
looking
will
like.
be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement,
Go to 15
because
minute.
that really does become the important question we
15
think
minute
now
actually doesn't
is
look
how far
bad.
to go.
Look,
and
look
I'll
at
talk
all
more
this
about
action
that.
going on in
We
here.
think there's
This is
some
just
ground to cover
straight
before
manipulation.
we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report,
right, we
but
can
particularly
listen,
the CPI
but
report,
let's
do
look at
suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal
So we came up to this
possibility
multiplier
now, given
band
all
on the
concerns
VWAP
really
and
around
got
the globe
rejected
about
on the Dixie?
Fed policy sort of driving ahead,
I feel like
and everybody
they're
else
trying to get us to
dealing
come
with
back
their own
and go
stress,
long
as a
again.
result.
We've already
Well,
shifted below the 50
I think,
EMA on the 1 minute. Let's go to the 5
I'm
minute.
pleased that we have moved as fast as we
Ah.
have. I don't think we've
Wrong
over-tightened.
chart.
I think there's very difficult to make a case that our current level is too tight, given that
5
inflation
minutes.
still
Let's
runs
see where
well
we
above
are
the
on
federal funds rate.
the 50 EMA. We're
I
still
think that at this
above it.
meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's no, I
Let's
don't
go
have
to
any
a
sense that
different
we've
dynamic.
over-tightened or
Let's do
moved
it
too
like
fast.
this.
I think it's been good
There we
and a
go.
successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to
Still
cover
think
here.
we need
and,
ongoing
and
rate
cover it, we will.
increases.
Nick Tamarosa, the Wall Street Journal. Chair Powell, core PCE
Dixie
inflation
moving,
on a 3
still
or 6
moving
month
up,
annualized
moving back up.
basis and on
Had a little
12-month basis
retrace,
has been
little
running,
profit take,
in the
starting to
high
move
fours,
back
close
up.
to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward, a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight
This
on
is
that. You also
wild.
put some weight on rates across the curve. Very few people borrow at the short end of at the federal funds rate, for example. So households and businesses.
What are you
if
going to
they're-
do, Dixie?
They're very meaningful.
What are the other
positive interest
fiats?
rates all across
What are
the
other
curve for
fiats
them.
doing?
Credit
What's the
spreads
stock
are
market doing?
larger, so borrowing
Let's
rates
take a look
are
at SPY.
significantly higher.
No, I didn't want to change
and,
this to
I think
SPY.
financial conditions have
Change
tightened
this
quite
to
a
SPY.
bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's
Wow,
it's
SPY looks
something
like the
that
Dixie.
is the
That's
single
weird.
dominant thing to look at.
If I could follow up, what is your
So
best
does
assessment or
the
the
Dow
staff's best
Jones.
assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, people who publish an assessment of underlying inflation.
Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik, New York Times.
Hmm.
I wonder, do you see any
Oh,
evidence
Dow
at
Jones
this
is
stage
dropping
that
like a
inflation
rock now.
is or is at risk of becoming entrenched?
What's the Dixie doing?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved
Dixie's
now back down.
starting to
That's one piece of
really
data.
move again.
Shorter-term inflation expectations moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that
They
the
could
longer we
do a
have-
little
we're now
short
18
squeeze
months
here to
into
push this up
episode of high inflation,
a little higher.
and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched.
Yeah,
and so the thing we need to do
There's
from a
no
risk
telling
management
where this thing
standpoint
is
is to
going,
use our
guys, right now.
tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
We have room to go to the
Hi,
upside
Chair
for
Powell.
sure.
Thank you for taking our questions.
All the way
Rachel
up to
Siegel from the
21K,
Washington Post. The statement
maybe
points to
even
lag times.
21.
I'm wondering if you can walk us through how you judge those lag effects, what
2,
that timeline looks like over the
21.3.
coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is, it's a commonly, for a long time, thought that monetary policy
Right,
works
we're
with long
definitely
and variable
flirting
lags,
with the 50
and
EMA
that
on
it
the
works
1 minute.
first on financial conditions, and then on economic activity, and then perhaps later than that, even on inflation. So that's been the thinking for a long time.
All right, I don't think there's anything left from that we can gather. Yeah, so. All right, so. Looks like, yeah, I don't know. Like I said before I even started, best thing to do is to just wait for the presser to be over and see where price action looks like it might be heading. And right now, we've got the Dixie trying to make its way up, and Bitcoin kind of in a downward trend. I mean, we do have a lower high here. Not quite just yet, because we do technically have to create a lower low in order for this to be a lower high. But we did come down, come up, come down, come up, and now we're just kind of waiting to see which way this thing's going to go. Now we are having momentum kind of shift a little bit to the upside, it looks like. Where did I get it? Oh. We're going to push. We're going to push. We're going to push. All right, let's see. Let's take a look over here. We do have stuff falling. We do have stuff falling like a rock. Let's take a look over here at XRP. Boom. Row right down to the VWAP. What's it going to do? Is it going to keep pushing through? Looks like it. Bitcoin's coming down. How far is it going to go? Oh man, this is wild. XRP is dumping. XRP is dumping. AVAX kind of dumping. Hasn't hit the VWAP yet. There it goes. Bitcoin's come back down to the VWAP. It is trading below the 50 EMA on the 1 minute. On the 2 minute, it is below the 50 EMA and dropping hard. Let's go. Let's go. Come on, keep coming. Come on, let's get this vector candle eaten up. Come on, let's go. We're coming down on our RSI. Oh, come on. Coming back down to the VWAP. Boom, just made another 14%. Cool. All right. Well, so Jerome Powell says no expectation of slowing down rate increases. So, no pivot. Looks like no pivot. So, with that said, looks like there's going to be more rate increases going into the future, which, if you are forward looking, that would mean more dollar dominance, which means more bearishness for assets. And as you can see, the market's turning red. Yeah. It is what it is. I kind of expected it. With price action moving up during the week, kind of expected it to move down on the FOMC. So we'll just have to wait and see how far down we go. And yep, let's look at XRP. What's Dixie doing? Dixie pumping? Oh yeah, Dixie's going, dude. Dixie is going. Yep. But it's just coming back into balance. So is it going to reverse? Say if we break, let's zoom out a little bit. Yeah. Nice V bottom, V shape. Now, if it can't come back up, now it could just be recovering these vectors here. I'm sure there's vectors here. It's not turned on. Yep, vectors here. It's come back up. It's come back up to the daily open. So we could see a reversal here. We could see a reversal here. But be careful. Be very, very careful. You want to sell at the lowest point, and you want to long at the lowest point and sell at the highest points, guys. Not financial advice. What's it gonna do? All right. Well, that was fun. That was a nice little fun 1 hour stream. I'll come back to you guys later. Let things settle down, and we will talk about how price action fared for the day. If you could just hit the like button and also subscribe to the channel if you are new. And I will see you guys later tonight.